Hi friends, good evening. Today I have an update with regards to water management stock company called Enviro Infra Engineers. This is the second stock that I've covered with regards to water management and waste management, sewage plants. Yesterday we covered one company called EMS Limited. I've got an update today that that company has got another 780 odd crore order from the Kolkata Municipal Corporation. So I have decided not to, publish a video on that since we already covered EMS as a part of our uh, discussion analysis yesterday. So you can add another 780 odd crore order to it. So anybody who's looking at investing in that company would still keep in mind that consulting an expert or a financial advisor would be highly recommended to avoid any sort of losses occurred without doing any proper analysis and justification of the stock. So yes, we'll continue with this. Environmental prominent player infrastructure known for water management solutions announces development. Company has got major domestic water treatment projects valued at 306 crores, making a strategic move into renewable energy sector through acquisition, signaling a key diversification. A market cap of 4,160 crores. Enviro Infra Engineers stock closed at 241, hitting a 15% high from the previous close of 211 rupees. 306 crore order includes design, construction, and a 15-year of operation and maintenance of sewage treatment plants (STPs) in Chhattisgarh. The project involves STPs of varying capacity in Ambikapur 16, 14, and 2 MLD, Rajnandgaon 15 and 26 MLD, and Korba 33 MLD awarded by respective municipal corporations. Recent acquisition of Vento Power Infra Private Company has received a letter of intent from PTC India Financial Services Limited for acquisition of Vento Power Infra Private Limited, which owns a 40 megawatt solar power project in Bolnigar, Odisha. The project will sell power at 4.1 rupees per unit for around 18 years, and it's partially operational. The acquisition cost is 115.6 crores. Acquisition of Saltrix Energy Limited. The company via its wholly owned subsidiary EIE Renewables Private Limited has acquired Saltrix Energy Solution, holds 29 megawatt of solar power project awarded by the Maharashtra government through Maharashtra State Electricity Board distribution company. The project includes full-scale execution and will receive state financial assistance of 92 crores, that is 3.2 crores per megawatt. It will generate revenue at a tariff of 0.88% per unit for next 25 years. Over the last 3 years, the company has delivered an impressive CAGR of 68%, underscoring consistent expansion. Net profit for Q4 FY25 stood at 74 crores, up 30% year-on-year from 57 crores the previous quarter. Uh, so the previous quarter was 37 crores and 57 crores was the Q4 FY24. The firm's 3-year profit CAGR is 72%, supported by an improving return on equity CAGR of 35%, highlighting capital efficient utilization and strong earnings growth. Important disclaimer: the article cum information has been extracted from resources on the internet. Investment opinions and recommendations mentioned are solely of the respective experts, broking houses, and rating agencies. These views do not reflect personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. So this is the logo of the company. This is the current price, 234 rupees. The stock is up almost 11% today. Then you see over the last 1 month there is a negative 3% return. Over the last 6 months the company has a negative return of 28%. Over the last 1 year you can see 13% growth in the stock value. So whatever the market correction happened last year, October, November, that may be partly responsible for the negative return in the company over a period of time. So what could have been a good overall value of growth in the year due to the correction? It just stands at 13%, which is still good enough considering the current market trend and situation. Company established in 2009, engaged in design, construction, operation and maintenance of water and wastewater treatment plants and water supply projects, WSSPs and WWTPs for government agencies and entities. 4,147 crore market cap, price 236, high of 392, low of 170, price to earnings ratio of 23.5, book value 56.7. The company is trading uh, just over 4 times its book value. Return on equity is 27%. Return on capital employed is 31%. Face value is 10 rupees. Profit growth is 102%. CAGR over the last 5 years, which is amazing. Company has good return on equity. Three last 3 years of 35.5, which is also very good. Uh, Company is reporting profits, no dividend paid. Working capital days have increased from 79 to 139, which is a sort of negative point. These are the peer comparisons with Ion Exchange, WA Tech, Denta Water, Felix Industries, Apex Ecotech. You can see the price earnings ratio range from 15 to 32, 37, sorry. So they can be up and down here. So you can have to look at detailed analysis. Then you can see sales nearly increased by 70% in the last quarter. Then you can see net profit doubled within 1 quarter, which is an amazing job done by the company. Then you can see year on year, you can see 50% growth in revenue and about 60% growth in the net profit over the last 1 year, which is an amazing return again. You can see profit growth last year is 66% overall, last 3 years 72%, and the last 5 years 102%. So it is reducing, however, because the revenue is growing along with the profit. So there would be such further reduction in the amount of CAGR profit growth, but even 60% is a very great amount of return that the company is able to give. Sales growth of 46%, return on equity is 27%. So it's a recently listed company, I believe, which is the reason why there is no price reference for the past years. So something that we'll have to keep a track of. Then on the equity capital and the reserves part, huge increase in the amount of reserves. Borrowings remain steady. Liabilities have slightly increased. If company has good amount of reserves, I believe they can pay off some of their borrowings and reduce the interest costs and improve the overall profitability of the company. So Debtor days have increased, inventory days have reduced, which is a good sign. Days payable have also reduced, which is an amazing sign. Company is able to better manage the assets and also able to pay their suppliers uh, quicker than in the past. Uh, Working capital days have increased, which again suggests that there would be a lot of work in progress, which is the reason why working capital requirements have gone up. Then promoter holding is 70%, public holding is 25%. Again, a high volatility chance in terms of price and volume. DIIs have reduced their stake from 5.2 to 3.7, so almost 1.5% drop in stake there, and FIIs have dropped about 0.8%. So can see more than 2% of stake offloaded by FIs and DIIs, and the public has bought those uh, uh, stocks. So thanks friends for watching. Please share this video with your friends, family and associates so they could benefit from this information. Please also share valuable comments in terms of making the video and the content more appropriate in terms of adding value and suggesting ways to give you a better detailed report or detailed investigation. So thank you very much friends. Have a good night and we'll connect with another video very soon. Wish you a happy week ahead. Thank you for watching the video.